All right. Good morning, everyone, to Market Insights. Sarah Touchdown with Landmark Title. I am joined with Scott Kiburz, who is now the Vice ARMLS Chair. He's got a fancy new title, but he is still going to bring you the facts, the figures, the stats, what's going on in our market. He told me he is very, very excited to share his knowledge with us today. And we do this Market Insight on the first Thursday of every month at 9:30. So you can always come and join us. We do record it. We do have slides available after the presentation as well. So be sure to reach out to your business development manager who invited you here today. And without further ado, I turn it over to you, Scott. Good morning.
Morning, Sarah, and thank you, and good morning, everybody out there in Zoom land. Let's get right to work. As we look at the next slide, please, Sarah. This particular slide just came out from the National Association of Realtors, and it's about buying in the tight market. And so please know, if the National Association of Realtors is generating market collateral about a tight market, it's giving you and I credibility to our clients that this is hard. There is low inventory, there's competitive bidding going on, and I would put Arizona in the top 10 most competitive markets, if not far higher. But as you're engaging with your buyers and or your potential sellers who are becoming a buyer, these simple 5 things are really quite important. Is determine and stick to a budget, identify the desires, needs, wants of their home target, be ready to make a quick decision. That takes knowledge and confidence, and that is part of our reasoning for creating this monthly update on the market conditions, so that you're keeping your clients abreast of what's happening there. Then at this current market of the moment, we have to bid competitively. And if I can add an adjunct to that, I had a really intelligent conversation with a buyer agent who has won 9 buyer clients a home in the last 2 months, which is, as a percent, is pretty high. And what's very interesting as a side note as we get started, every one of those was with a home that was UCB. It was under contract, accepting backups. The number 1 contract fell out, and they wrote their backup offer to put them in number 1 position. 7 of the 9 were cash buyers in first place. 2 of them were clients that had a loan product. They won 9 out of 9, and all of those were UCB. And that is a tactic that has been very successful for this particular buyer agent. Last but not least, work with a professional realtor. Sarah, let's keep moving. In our marketplace, showing time is giving illustration of where are we compared to 2019. Obviously, in the gold line, you can see the trough of the pandemic, and it hit, but we're back to a pretty normal place, within 4.5%, almost 5% of where we were a year ago. And in addition to that, we've added the capacity of a lot of virtual showings, and agents, for the most part, are putting even more pictures into their listing. So clients are getting accustomed to more pictures and a virtual showing, and that is still keeping us within 5% of our normal showing this time of year, in spite of our pandemic. Sarah, if you would, for me, let's keep going. I love this particular slide right here, ladies and gentlemen. I'm going to spend just a little bit of time here. This is from John Burns. He's a consultant out of Southern California. This spoke to me at a very high level. When we go back to early January of 2020, our market for the most part was strong to very strong January, February. And this is a nationwide look at the marketplace. But with the COVID hitting us in the middle of March 12th, 14th, it slowed down the entry first-time home buyer, and it truly slowed down the move-up buyer and the empty nester person. They pumped the brakes hard compared to the entry-level first-time home buyer. Right out of April, those first-time home buyers started to rebound and go back to a normal market into strong, and now have been very strong for the balance of the year going into September. The second home and luxury buyer pumped the brakes, came out slow, and now they're in a very strong position. And the empty nesters, and technically I qualify for that, that group of buyers and sellers stood on the brakes, have been slow through August, coming out strong. And I am going to anticipate, if we look at this in November, December of this year into the future, almost everything is going to be a very strong marketplace. I share this graph with you because if you're working with a specific buyer and or seller, gosh, this is kind of their mindset as a whole. And then you have to apply that to the micro market, sub-market of Maricopa County, Metro Phoenix versus Dallas, Chicago, Denver. We're just in a very, very strong market. Sarah, if you would for me. When you apply this into the future, ladies and gentlemen, this comes from the Arizona Mag forecasting for the year 2040. And as you're building knowledge and trust with your buyers and sellers, I just pulled this one graph of the top 20, 25 metro populations, and they're just looking at the population in 2018, 2020, 2030, then 2040. And it anticipates what the population growth is going to be in that area. When you look at the town of Buckeye going from somewhere around 89,000 to over 300,000, that's just shy of a triple in terms of growth. There is going to be a lot of things happening in the town of Buckeye in the next 20 years. And after raising kids, 20 years goes by very fast. Whereas if you looked at the town of, say, Gila Bend, it's 2,500, and in 20 years they anticipate not quite a double, up 50%, but just to 3,700. So I share this graph with your audience just because it's going to give some anticipation of what's going to be growing. Is the build out going to be significant? Is it going to be lower? And what happens with those doors? They're anticipating Metro Phoenix currently at 1.6, zooming over to 2,019,000 the next 20 years. Sarah, let's keep going. This is October of 2020 from the Cromford report. And my audience in my office, we like to look at this particular graph because we have this thing we call in our office, we call it the load of luxury. So we're used to seeing this graph in October, over 3 million. We're used to that being 40, 50, last year, 64 months of inventory in October. This graph is the most current one they have, but they're anticipating only 11 months of inventory over 3 million. And that a balanced market at 6 months is between $2 and $3 million. Everything else, we're down to an average of 28 days of inventory on the marketplace. Things are moving very quickly. When you look at the $3 million marketplace, that's part of that is, strong part of that's Paradise Valley, parts of Scottsdale, parts of Arcadia. That's going to be the lion's share of that marketplace. And that market is more than brisk. Sarah, if you would for me. Just anticipating this, ladies and gentlemen, we're going to look at trends, and we'll probably look at this graph for you once a quarter in this as we move forward. But this is, again, from the Cromford report. It's notice of trustee sales by month. And just look at the year 2020, how that's just a fraction of the normal run of trustee sales. Well, that is due to the moratorium on the government putting out there for evictions and things like that. People have been able to go into forbearance and not have to move into a trustee sale. Whenever that does slow down, we'll watch this graph hard and see if there's a rise back to a normal, which is somewhere around 500. Does it surge to 7 to 8 to 2,000? And then with the increased value of our homes that have happened this year, there might be people that under a normal market go into a trustee sale. But because there's so much equity in their home, they may just become sellers in the market, pay back that debt, and go find another home and boomerang right back into the marketplace. Please know we're going to watch that graph moving forward. Sarah, if you would for me. This graph here is also from Cromford, and we'll be done with them for today. I love to look at this graph once a month for this reason. This is what they call their extreme market conditions graph. And in the last year, we've got 4 extremes that have hit. When we go into June and July of 19, the number of sales that were hit per month and or in a 7-day average peaked in June and July last summer in 2019. That's the first green arrow. What just happened on the first of this month is our monthly sales per square feet surged to $207 plus per square foot. Our listing success rate, ladies and gentlemen, in Zoomland, when I went through training, we were used to seeing 65 to 70% of listings do sell just in 30, 60, 90, 120 days, 65 to 70%. We are currently in ARMLS, the Arizona Regional MLS, at a 90% success rate. If you have a listing, 9 out of 10 do go on to sell. Now, of the 10% that don't, there is a higher than normal group that put their home out there to market, and then they don't have any place to move to, and they move to temporary off market, or they cancel the listing and make a decision to go to Home Depot or Lowe's, which those stocks are just absolutely surging, and remodel where they're currently living. So if you truly have a listing, 90% chance of it selling moving forward. And then in this last green arrow, median sale price, as of 11/2, average sale price 383, 333, average and median. This is for everything that goes through ARMLS. And with this Cromford report, that includes the White Mountains and Flagstaff, Tucson. Anybody who has membership into ARMLS includes in this data. So when we move into the next set of statistics, my bellwether is what's happening in Maricopa County. So as we move into the next group of slides, I'm really focused on Maricopa County only. And thank you, Sarah, perfect timing. So in this slide here, this is as of the 2nd of the month, right after the month end and Monday. We had 7,000 active listings in Maricopa County, sold 7,749, under contract 10,842. If we go to the next slide, Sarah, that's a tell-all. You're looking here at the median average sales price. When you go back to even November of a year ago, you can see our trend is surging even faster than it was in the first 6 months of the pandemic of 2024 or 2020. Our market truly is surging, and we're now piercing $200 per square foot for the first time. Sarah? This slide here is from ARMLS. This is going back 48 months. And the focus is on the right hand of the graph, the four months where our absorption rate has been north of 100%. This current month on November 1st, we were at 113% absorption rate of active listings versus sold, meaning we're selling everything we had in a number in the month of October, and we're jumping into November and pulling that in to get over 100%. And that is a fierce rate. Moving forward, Sarah, we're going to jump into all of Maricopa County. So if we just stopped our meeting today and stood right here and spent some time, this is all of Maricopa County only, and our active listings are down in the blue dot, 38% from where we were a year ago. We have just 7127 on this day in October. Our sold listings are up by just under 20%. Median sale price, this one in the yellow, I look hard at that. It's up 15% in the last 12 months. Now, as we move through the balance of these slides, we're going to look at about 15 different cities. Back up one second, Sarah. We're going to look at about 15 different cities. And so if you're working with a buyer or a seller in a specific city, people in Zoomland, you'll get a quick glimpse of what's happening in that city. Overall, we're at 28 days of days on market, and our supply at 0.88 of 1 month. So overall, we are just about half of where we were a year ago in terms of months of supply, down 48%. Sarah, moving forward, I wanted to take a deeper dive so your audience would understand what do those numbers mean. Well, this is, again, all of Maricopa County. And this is another graph that I just absolutely love from ARMLS that they've created. So in a nutshell, looking across the top line, we've got actives at 7127. And then below that, you can see our actives are actually up 9% in the last month. Now, one, that's a great thing. And two, we're used to, again, I used this phrase earlier, the load of luxury. We're used to a lot of homes in the 700 to 10 million come on the market at this time. Under contract, we're up 2% at 10,664, and our solds are at 8085, and that's up 2% from where we were a month ago. Now, if you look hard at this graph, on the top line in blue, sold listings 8,085, and you come down to line 2 under new listings, and our new listings are at 9,625. What this is really telling our audience is that we sold 8,085 homes and we listed 9,600. We're adding at this run rate 1,600 new listings this month. So this time next month, we're hoping that we're even higher in the 7s and starting to get into the 8s. It'll just make our marketplace have less pressure in it. The other thing I want to point out to your audience here in the pie graph in the middle, and this is just for Maricopa County, we'll do the same thing for Phoenix. Our normal sales are at 87%. That's fantastic. Please know in green at the whole Maricopa level, we're flipping homes at a rate of 5%. That's just good to know. Our new builds in Maricopa County, just 3%. There's a lot of lotteries going on in new home divisions. Sometimes they're only releasing 2 or 3 lots in a subdivision per month because they just don't have the bandwidth of manpower to build the homes that would meet demand. So that is a deeper dive into the market of the moment for all of Maricopa County. I included in the gray what in 2020 October, if you in your focus look at $200,000 to $300,000, MOS's months of supply at 0.5, just over half a month, and STL stands for sale to list price. Both the 2 to 300 and the 3 to 500 are over 100%. That is the average for every home sold, and the 2 to 3, 3 to 5 are the sweetest, highest number of homes sold price points that we do in any given month. And overall, they're at 100% plus. I'm going to come back to the very first slide from NAR when they say make a competitive bid. A lot of people are doing escalation clauses. They're putting in terms that if the home doesn't appraise, they'll pay X dollars over appraised price. They're working hard to get a home, the buyers are. Sarah, we're going to do the same thing for the city of Phoenix, if you would. So here's Phoenix in a nutshell. Phoenix is up 15.5% in the last year, and that's in the yellow slide. We have 28 days of inventory. That's in the purple slide. And our listings are down by 37%. If we go to the next slide, Sarah, we're again stacking inventory in the city of Phoenix. So our actives are just at, and we have population at about 1.6 million in Metro Phoenix, and we only have 1,833 active homes. Now that's actually up 15% from where we were this time a month ago. Our under contract is 2,715 in the blue. Our solds are at 2,099. In the Metro of Phoenix, I always look at what did we sell in this graph, 2,099, and new listings, 2,572. Again, we're stacking just under 500 new doors in Phoenix on a monthly basis. If we can continue that, we'll continue to climb out. In the black, in the pie graph, we're at 85% of the homes, our normal sales. What I wanted to point out, all of Maricopa County, we looked at the flips, we're at 5%. All of Metro Phoenix, our flips are higher at 7% of all the homes are being flipped. And then last but not least on this, the $200,000 to $300,000 price point in Metro Phoenix, it too is over 100%, while 3 to 5 is 99.9, just under 100% of actual list price. Sarah, I have talked super fast. How are we doing so far out there? Doing good. So as we move into, this is now alphabetized to the end, ladies and gentlemen, and we'll try to wrap up here for you. But when you look at Apache Junction, Apache Junction, part of that is Maricopa County and part of that is Pinell County. So please know I included both counties so we can maximize if your home is going to be in Apache Junction, no matter what county, all of that is included here. And Apache Junction in the gold dial is up 20.7%. We have just 26 days of inventory. That's for both counties. Sarah, Avondale has been on fire. I mentioned a couple months ago that we learned that the Amazon is secured an 800,000 square foot super warehouse, and they're going to be putting in at least 10 more throughout the metro. That super big warehouse is in this community of Avondale. It's up 18%. What I want to point out to anybody working with buyers, there's median days on market just 15 days, 2 weeks. Oh my, that is fierce.
We touched a lot yesterday in the fourth quarter update with Tina Tambor. She touched on a lot of businesses coming to the West Valley.
They are, absolutely. And Avondale has a progressive leadership in their political environment. They're, again, right on the 10. They're just doing a lot of things right. They're being very proactive. Sarah, if you would for me, Buckeye. Buckeye in the MAG graph is going to go from 89,000 to over 300,000 people in the next 20 years. Days on market are just 24. It's up 14%. But just know there's going to be a lot of building, a lot of activity, a lot of population moving to the community of Buckeye moving forward. Next, Chandler is just such an idealistic community to live in. It's up 11%, 28 days of inventory, median sale price $205.25. It's just thriving. Next, Sarah, is Gilbert right next door. It's up 14%, $200 a square foot, 25 days on market. Active listings are down 61% from a year ago. It moves very quickly. Glendale up 15%. Month supplies down by 50%. Days on market just 22. It too is thriving. That west side growth is significant. Goodyear, again, fierce. Next, Litchfield Park. So you had asked me to make sure I include this. Active listings here down 55%. It's up 21%. Median sales price from where it was a year ago. A year ago, you could have bought in Litchfield Park for $139 a square foot. Today, it's averaging $169 a square foot. That's significant growth, yes? Town of Maricopa is obviously in Pinell County. We jumped down there to look at that. It too is up 19%. Active listings 58, down 58%, and days on market just 26. Next slide for us. Mesa, again, thriving. It's up 14.9%, 24 days on market. It's competitive. It is just competitive, mid-competitive. Paradise Valley, we're going to pause here and we're going to take a deeper dive here, ladies and gentlemen. And I have some time permitting. I have a couple bonus slides when you send this out to understand Paradise Valley. So Paradise Valley a year ago in October, average sales price was $305 a square foot. This time, a year later, $421.80 a square foot, up 38%. 38%. And that's one of the most expensive zip codes in our metro, in our state. That is an example of absolute surging. I want to go a little bit deeper dive into there, please. So you have in Paradise Valley, you have the Ritz-Carlton being built. You have Mountain Shadows that's built a lot of new homes there. You've got a lot of people going in. They're buying an older home, scraping it. They're buying an older home, taking it to the studs and adding 1,000, 2,000 square feet and putting in what we like to refer to as forced appreciation. They might go into that house at $295 a square foot, an original home. They could scrape it. They could take it to the studs, add square foot, come out at $500, $600, $700 a square foot. And that is pulling our whole average up to, in this case, $421 a square. The other part to that is when you look at the Ritz-Carlton, it's selling at an average of $1,500 a square foot. The Borgata area was selling at $1,200 a square foot. So there's some absolute wealth coming in and around the north side of Camelback Mountain. And ladies and gentlemen, if we're pulling our most expensive zip code up 38% on an average within the ARMLS statistics, that is going to lift every part of the metro. So we have a phrase, it's been around since my dad shared with me when I was a kid. Statistics don't lie. These are the actual statistics. And then there's a part two to that, liars use statistics. Well, we're not trying to lie or deceive anybody, but we do want to know the backstory of why this is happening. We're used to seeing 80 doors sell in a year's time over 3 million. I think we're going to be at 122 already this year, and that is lifting our whole metro. That's my deeper dive in Paradise Valley. Sarah, if we can continue and we'll wrap up. Peoria, up 14.4%, days on market 28, thriving. Great, great place to be. Vistancy is part of Peoria, second highest ranked planned community in our metro, only to, just went out of my head, Eastmark in the Mesa Gateway area. Please continue. Queen Creek, again, it has 2 counties that it's part of. This is both combined in Pinal and Maricopa County. 30 days on market, it's up 19%. It's fantastic. Please. Scottsdale, wow, just super strong. We're up 16%, median sales price at $274 a square, 37 days on market. I'm going back to the year 2007 when I took a deep dive into the community of Scottsdale. We averaged just under 250,000 normal population in Scottsdale throughout the year, and they surge by about 250,000 winter visitors. The base of population of Scottsdale really hasn't changed, but the winter visitors coming in has been pretty steadfast at 250,000. Excuse me, and that lifestyle is dining and resort living and now a great place to work. It's all there. They're just doing a great job in the community. Please. Surprise. Oh my. Active listings are down 44%. It's up 15%. Days on market 26. Sarah, as we get to the last couple slides, you know, people talk about savings account and returns on stock markets and things like that. I don't think there's many people that anticipated a plus 10% growth in their home value in the last 12 months. If you would ask them 5 years ago, can you get that? People I think would bet against it. We know through the Case-Shiller report that you go back about 180 days and adjust for inflation, the average increase of a home is 2% a year for 180 years. We're talking 9, 15, in Paradise Valley, 30%. This massive growth surge in our marketplace.
Significant.
Significant, yes.
Yeah, I've talked with homeowners who have $100,000 in equity in just the last couple of years. That's a lot.
That's a lot. That is, yeah, that's a lot. Sarah, a couple more here. Tempe, Arizona, active listings are actually up 3%. I love looking at Tempe consistently. It's a landlocked community. We can't expand and build out like we could in Buckeye or Queen Creek or Maricopa. There's no place else to build in terms of being landlocked. And yet we've had this pandemic, which impacts a lot of homes that are rentals near the campus. And yet throughout all that, it's still up 11%. That is a testimonial there. I think we have just 1 or 2 more. Tolleson. Somebody brought up Tolleson just the other day in my office. We only have 11 days on market there, and it's up 9%. Active listings are down by 71% in that marketplace. I think that might be our last slide, Sarah. It is. If there was any questions, Sarah, we'll take them quickly, but please know, ladies and gentlemen, this is designed to share some trends, what to look for, what to anticipate, and we just want to have it be a positive impact on your business. And please know the Landmark Title folks have just been phenomenal at the title escrow, branding, marketing, and it's a privilege to be a part of this for you, Sarah and team.
We appreciate it, Scott. And I think these are your bonus ones, right?
Oh, these are a bonus. Just super quick. We won't go into hard detail here. This is about the town of Paradise Valley. You got to come all the way down to the bottom line of $1 to $3 million. When you look at under the second column in the middle, prior year quarter, basically center bottom of the page, we were at 308 a square foot last quarter a year ago, and we're at 415 current year, current quarter. And then right below that, the highest ranked $3 million, we averaged 556 a year ago. We're at 617 a square foot today. And that is my example, that one, and then the total number sold. When you look at column one supply, we, a year ago, under October 1 to 3 million, we had 81 homes, in total 226, and 122 over 3 million. What we're looking at there is altogether today in October, we had 226 homes available in PV. I think there's about 4,400 doors total in that metro. Last year, this time we had 296, and 176 of them were priced between 1 and 3 million, and only 93 were over 3. Those last two columns this year, the 81 homes versus 176 is part of that whole surging our cost per square foot, and we have 122 at over 3 million versus just 93 a year ago. Sarah, that's the backstory.
Nice.
Be a part of this.
Yeah, I've got a few upcoming classes. If anybody has any questions for Scott, please put them in the chat feature and we will get to them. So next week, we have, I believe it is our third edition of our Marketing Mastermind series that we're doing with Patty and Michael and Tiana Soto of Nova Home Loans. We're going to go over HomeBot. So this will be a great one. All of these masterminds have been incredible, and they are participation. So it's not just like Scott and I on camera. We want to hear from you, and we want to collaborate. That's the fun thing about a mastermind. So this is next Tuesday, November 10th at 10 a.m. You can get in touch with Patty. You can get in touch with me. We can shoot you over the registration link, and we would love to have you. And then not educational, unless you count learning about cooking educational, which I do. So this is why I got thrown on here. Our very own Mary is hosting a cooking class on Zoom. So this one will be fun. And guess what? It's not even a weekday. It's a weekend. It's a Saturday. So if you would like, and this one's at 4 o'clock. So if you'd like the registration link for that, you'd like to get the supply list, there is the link on here, but you can reach out to myself and you can reach out to Mary, and we would love to get you registered for this. And then we have another CE solar class coming up. We did a couple of these a few months ago, and these classes, they filled up because the information, I did one of these, and I had people that attended the class and registered the class, not even because they needed the CE credits. They just wanted the information. And Tara does a great job telling you what you need to know for yourself and your clients when it comes to solar. And it's CE credits, and it's only $10. So if you'd like the registration link for that, Patty is hosting this one. Let us know. Get signed up. It's November 17th at 1 p.m. And then last but certainly not least, the next day, our Beth is hosting another CE class. This one is Commissioner Standards and NAR Code of Ethics. So if you need that credit, get that credit. It is November 18th at 1 p.m. Once again, the cost is only $10. We're getting towards the end of the year, folks. Get these CE credits in. There's always mixed emotions, or I hear mixed feedback about these CE Zoom classes. I personally love them. I love to be able, you get breaks, you get to sit there, I drink my coffee. I like these. So you don't have to go anywhere. So, and you get to sit there in the comfort of your own home. So get your credits, get your license updated, and take advantage of all the great classes that we have at Landmark Title available. Also, we're getting into the holidays, so I wanted to throw in the November pop buys that we have available for you. I've done a couple of different pop by classes and pop by making parties. I love pop buys because it kind of goes along with my exuberant personality to do things like this. So these are just an example of some of the ones that we have available at Landmark Title. So get with your business development manager and do these pop buys. The holidays really are a great time to stay top of mind with your clients. And if you don't like these, we can come up with other ones. If you have an idea, we can make it happen. Same with anything that you need to stay top of mind with your clients through the holidays. Let's sit down, let's collaborate, and let's make sure that you are the person that your entire sphere thinks of when they think about real estate. So Scott, I don't know that we have any questions. I feel like you covered everything.
Well, I talked as fast as I could, and I hope it was positive information. Again, Sarah, thank you. Thanks to your team. We'll see you next month.
Yes, thank you, Scott. It is always a pleasure. You break it down so well for us to understand and to really understand the importance of not only knowing the information, but why we need to know this information. And we are extremely grateful for that. And thank you to all of our business development managers, Beth, Becky, Melinda, Mary, Zach, Patty, and Michael. Anything that you all need in the real estate industry, please reach out to them. They are your industry partners and your power team. And thank you to Landmark Title. We have 6 locations to serve you, with opening up a Goodyear location here in the very near future. So wherever you are doing business in the Valley, we have a Landmark Title office to help you with your real estate, escrow, title, and marketing needs. So everybody have a great day. Thank you, Scott.
My pleasure. Happy day, everybody.